Hello traders, this week is a week that the markets are enveloped with purchasing managers index data releases from across the board. In this video, we will be delving into how to trade the PMI data as we also learn how the data impacts the global financial markets. It is important to begin by outlining that the purchasing managers index, that is the PMI data, plays a pivotal role in financial markets. Typically, it provides insights into the health of a country's manufacturing sector. At the same time, we have to mention that it is usually released monthly by various organizations such as market in collaboration with financial institutions, and it surveys purchasing managers across different industries so as to gauge the business conditions. As such, traders should take note that a PMI reading above 50 usually indicates expansion, while a reading that's below 50 suggests contraction. This data is crucial for policymakers, investors, and traders alike and influences their decisions on interest rates, monetary policies, and market positioning by traders. At the same time, traders should take note that the PMI data is usually published on a monthly basis and usually comprises of three types: the manufacturing PMI, the services PMI, and the composite PMI. The manufacturing PMI is the most well-known type of PMI. Usually, it measures the health of the manufacturing sector within a given economy. The index is usually derived from surveys of purchasing managers at manufacturing companies and covers aspects that include production, new orders, employment, supply and deliveries, and inventories, among others. On the other hand, the services PMI usually measure the performance of the sector or the services sector, which include industries such as finance, healthcare, retail, education, and much more. Typically, the services PMI considers factors such as business activities, new orders, employment, and business expectations. The third type of PMI is the composite PMI, which combines both the manufacturing and services PMI data to provide a broader picture of the overall economic activity in any given country. This can be particularly useful for assessing the overall health of the economy. Typically, PMI provides insight into whether a sector is expanding or contracting by examining various business activity components. The PMI is a widely recognized and followed indicator that helps analysts, policymakers, and investors to assess the overall economic condition of a given country. The PMI can be viewed as a primary and forward-looking indicator reflecting overall economic or the overall current economic condition and provides insights into potential future trends. The market response to PMI data can be quite significant and can impact various financial assets, as we will see. As with any economic data, the market response to PMI releases will be largely dependent on the consensus estimate of each of the numbers against the actual numbers released and how close this is to the estimates. Typically, a figure that is wide of the mark compared to expectations is likely to produce a more severe market response and in most cases resulting in heightened volatility. The response depends on several factors, which include direction of the PMI reading, the sector being measured, the overall economic context, the global significance of the country or of the country relevant, such as US PMI may have more global market impact and underlying market sentiment. In equity markets, for example, a PMI reading above 50 is generally seen as a sign of economic expansion and growth. In the event of a better than expected number, this can lead to increased investor confidence in markets' overall health, potentially driving stock prices higher. Or rather, when a reading is above 50, it is likely to result in the rise in the stock prices. Conversely, a number less than expected or a number below 50 is likely, as with this and those asset classes below, to have a reverse impact, that is, a fall in the price of stocks. At the same time, in the foreign exchange market or in Forex, a strong PMI reading can strengthen the currency of the country due to increased confidence in its economic outlook, and also in interest-sensitive environments may encourage central bank action potentially. Simply said, a reading that above 50 is supposedly or likely to result in a rising of the country's currency. So it would follow that traders would take a long position when a reading is above 50. At the same time, in the commodity markets, a positive PMI may signal increased demand for raw materials and resources, potentially boosting commodity prices, notably base metals and oil. Again, the country for which the PMI is released is relevant with a global impact on commodity prices only with the major manufacturing economies. We also have to note that central banks often closely monitor PMI data as part of their decision-making process regarding interest rates. Typically, a strong PMI might suggest an economy is heating up, potentially leading to discussions of tightening monetary policies, that is, raising interest rates so as to reduce the likelihood of increasing inflation. On the other hand, a weak PMI might indicate the need for loosening policy, that is, lowering interest rates so as to stimulate growth. Also, we have to know that different sectors can have varying sensitivities to PMI data. For instance, manufacturing-focused indices and stocks may have a more pronounced response to PMI data related to manufacturing, while on the other hand, service sector indices may react more strongly to service sector PMI data. The PMI data is a valuable tool for economists, investors, and policy makers, as we have mentioned, and this is they use this to assess economic trends, make informed decisions, and also to understand the performance of various sectors within an economy of a given country. As we finalize, we have to mention that when trading, the main responsibility is not only keeping abreast of when the PMI data is released, but also take into account the potential risks as the market or as the traders make their trading decisions, and particularly when trading such significant economic data. Thank you for watching, and let us interact again in our next trending video.